All right, welcome back. You're still watching Traders 20 right here on 18 now, and we have Sameet Chavan as well as Jay Thakkar joining us with their calls and their strategies as well. Good morning to both of you. Sameet, I'll come to you first for your top ideas for the session.
Good morning. We have three buy recommendations. First stock that we like is CESC. We have been a bit on the stock since last few trading sessions. Since last 3 to 4 days, the stock experienced decent profit booking from the higher levels of 615, 620. However, we expect 575 to 570, which was the earlier resistance, would now act as a strong support. Going forward, we expect this stock to climb towards 610, which is our target, and stop loss can be kept at 564. Second stock that we like is MCLEOD RUSSEL with a stop loss of 227. It can be bought for a target of 246, 250. This stock has been oscillating within the boundaries of downward sloping channel since last few months. Today it has given a decisive breakout on the upside from this channel around 234, 233. Going forward, we expect this momentum to continue at least towards 245, 246, and stop loss would be 227. Third stock that we like is EXIDE Industries for a target of 161, and stop loss would be 150. Basically, this stock is a slow moving stock, but the volume activity happened in last 3-4 days is quite encouraging. The volumes are picking at the lower levels of 150, 151. Hence, with an anticipation of a breakout, we advise this stock to be bought for a target of 161, and stop loss would be 150.
Okay, that's the call coming in from Sameet and some of his top recommendations. In fact, that was the management of Rallis India. They're addressing the media in just a short while. And remember, it was a pretty tepid Q1 that the company did put out. So we'll just be cutting across to that. But in the meantime, Jay Thakkar is also joining in to run us through what exactly he's picked out for the day. 3 buy recommendations, Jay.
Yes, good morning to both of you, first of all. And I have 3 buy ideas for today. I think that the first choice will be IRB Infra. The stock has given a good breakout from a huge consolidation. The stock was in a consolidation phase since September 2014, and recently the momentum indicators now on the weekly charts have completed its downtrend and now reversed from the zero reference line, which is the first sign that the stock has reversed. Second is the stock has given a breakout from a downward sloping trend line. That is the second sign, and the final thing is it's trading above its short-term averages as well. So I think with a stop loss of 243, the risk reward is quite favorable because the target on the upside comes to around 251, 272 and 280. The second buy call is on Bank of Baroda. The stock, the entire PSU bank, are performing well since yesterday, and I think Bank of Baroda among them has a good buy crossover in its momentum indicators, as well as the price on a daily chart. The price is making higher top and higher bottom formation. I think that one can buy Bank of Baroda at these levels. The target comes to around 164, 170, and the stop loss can be placed at 152. And the final one is Tata Motors. On the weekly charts, this stock looks quite oversold. We had seen a good momentum coming in this stock in yesterday's trading session. It's holding on to its yesterday's lows. So I think with that as a stop loss of 385, one can buy the current levels for a bounce back or a short covering, because we expect this stock to bounce till the levels of 415.
Okay, Jay, thanks for that. Let's quickly go across to Manisha Gupta, who joins in, our commodities editor, with a quick update on strategies that are dominating the commodities universe. And Manisha, it's really about how much more downside there is to commodities from these levels, and how much money can you make on your short trades. As I read some of the commodity reports, it's really a blanket short for most of these commodities.
It sure is, yes, Tanveer, and also especially after the Chinese PMI numbers, which have come at a multi-year low, that really adds to concerns there, and that's the reason you have seen yet another day of decline coming in for the commodity prices after those Chinese data. So the gold prices, which tried gaining up back again above $1,100 per ounce yesterday, are back at around 1,085 on your screens, and we have seen 5-year lows not just in the international gold prices, but it also is a 4-year lows coming in for the Indian gold prices as of now. It's pretty much the same picture when you talk about the energy space. It's trading at a 4-month lows for the NYMEX and the Brent prices. We are holding below $50 per barrel for a third straight day for NYMEX, and it's just about 50 and 55 and 56 that the Brent seems to be holding as well. The data has been on the bearish side. The global glut situation continues, and the US weekly numbers also were very bearish for the prices. So this sector as well would continue to see some pressure going ahead. And the Chinese PMI numbers definitely have made a dent on the base metal sector, where you already have seen the LME index down by nearly 14% in this month. This is a third monthly decline that this sector seems to be clocking for the month of July as well. For today then, how do you trade all of those commodities? For that, let's get in Gnanasekhar with his strategies on all of that. Gnanasekhar, hi, good to have you. What's your sense really coming in for the gold prices now? Where do you see an immediate support coming in for the Indian prices?
I think, the psychological level of 24,000 is going to be some kind of a decent support. But, more than that, I think you need to be looking at the dollar price, which in my sense, somewhere close to 1045 or 1020. That's a kind of a zone where some decent support can be seen. But looking at the overall picture, it still looks like till the event risk, which is the Fed interest rate hike, is over, even any potential rallies could be short-lived, or any kind of a pullback could be short-lived. The overall bear trend continues in gold now, and potentially headed towards 1045, 1020. I think in our and the domestic exchanges, somewhere close to 24,000 or in between 23,500 to 24,000. I think that's the kind of a zone where potentially prices could bottom out.
Also, how are you looking at the crude oil prices? Because the NYMEX prices are down 18% in this month, and we have made lower low on the charts continuously for most of 2015. Where do you see a support? There have been various reports talking about 45, 43 onto this as well. Do you see that much bearishness?
Yeah, it looks quite likely now that it's come to 48. It's quite likely that it might come closer to 45 or even below that. I think 40 is quite likely under present circumstances. But you should not forget that Saudi Arabia has not cut output and they've been maintaining. The potential turnaround could come in crude if they change their stance. And that's something one needs to look out for as far as crude is concerned. With the Iran supply potentially coming into play in the next 3 to 6 months, the glut situation is something which the market is looking at presently. But I would personally look at turnaround signs. I think the first turnaround sign will be any statements from Saudi Arabia on their possible output cut. So near term looks potentially bearish. Anything closer to 3,000 in MCX is possible. Similarly, in dollar terms, anything below $45 also looks likely. So as of now, as a trader, I think you should be on the sell side. But once it comes closer to $45, you'll be on the watch out.
Gnanasekhar, we'll let you go at that. I appreciate you joining us with your strategies. That's the view coming in from Gnanasekhar, a sell call on gold and crude for the day today. With that, it's back to you guys.
Okay, thanks very much, Manisha, for joining in and giving us all of those details then in the commodity space. And here's an important disclaimer then to all of our viewers. If you're going to be taking on board any advice, you should consult your financial advisor. Tell you what, we'll slip into a quick break right here on the show. Do come right back for the stock game.